Hello everybody, welcome to 3-Minute Investor. Today I'm going to talk about how to pick ETFs to buy and hold and retire rich. I'm going to demonstrate this using the Fidelity ETF screener. This is a free resource for anybody to use. Just sign up for an account and you can be using it today. So I'm going to go down to the basic ETF facts and hit net expense ratio and select very low. So I didn't select low because I think low is still relatively high for a retirement investment. This may not seem like much and you may be wondering why I care so much about a small percentage difference, but let me show you why this matters. On the left-hand side is an expense ratio of 0.1 and an expense ratio of 0.6. And when I enter that information, I get a difference of $60,000, which is money that should be sitting in our retirement account, but instead was given up in fees. Next filter that I want to select is investment philosophy, and then I want to go ahead and select passively managed. Typically, active managed funds have fees that would be much higher, so this is something that we want to avoid for a retirement investment. Next, I'm going to go down to net assets, and I'm going to look for a net asset value that is very high. I choose to do this because these ETFs tend to be more liquid. This is not extremely important, it just helps me narrow down the search a bit further. To further narrow my search, I'm going to go to objectives and select equity and equity style box. And then from there, I'm going to select all the large cap stocks. This will increase our exposure to bigger, more established companies like Google, Amazon, and so on, and carry less risk than smaller startup companies. Lastly, and I'm sure the one that people are most interested in, is the performance. So I'm going to click performance and I'm going to go to market total return, and I'm going to go as far out as I possibly can to the 10-year. And from there, I'm going to look for medium, high, and very high, and you could use this at your discretion. I'm just using this for this exercise. Anyway, now that we have our filters in place, we now have a list of ETFs that meet all of our criteria that we can begin to dive into deeper. So with these filters in place, I believe this is a good place to start. And I want to reiterate, this is a good place to start because there's so many other filters you can place to narrow down your search even further. I like to start by clicking the net expense ratio to see which of the ETFs have the lowest fees. So by clicking on that, I can now put these ETFs in ascending or descending order. So now you see this is the lowest to highest. I would stay away from specific sectors and just go for an ETF that tracks an index like the S&P 500 or simply picks good value large cap stocks. Some of you may be saying to yourself that these look like great investments, but the problem is I can't afford them. And it's a common misconception is, let's say for example, if I had $10,000 and I bought an ETF that was worth $10,000, I only got one share, or I bought an ETF that was only $1, so I had 10,000 shares. The most important thing is the money invested. 10% move on either one of those ETFs, regardless of how many shares you have, will have the same return. And I'll put that down below so you can get a visual of what I'm talking about.